Hi guys, welcome to my channel. So before we get started, make sure to hit that like button, also subscribe to my channel. Post-pandemic world winners and losers, so make sure to watch the full video. U.S. new home sales have hit their highest level since 2006. Russia increased interest rates by 50 basis points to 5%, the second rise this year. FT analysis shows vaccine uptake is increasing among ethnic minorities in England for up-to-the-minute coronavirus updates. Visit our live blog as young people emerge blinking from lockdown. They will start celebrating their newfound freedom by organizing and sharing their social activities like never before. That's the thinking behind the forecast for an 80% rise in revenues for the next quarter from Snap, the parent of messaging app Snapchat, as it announced its results. The flurry of earnings statements over the past few weeks has offered us a range of insights into consumer behavior, as well as a guide to the changing fortunes of the world's biggest companies as vaccines brighten economic prospects and economies, in the richer parts of the world at least, reopened for business. U.S. banks were among the biggest winners in the first quarter, benefiting in particular from a boom in investment banking. Record profits were also announced by the likes of asset manager Blackstone, boosted by rising prospects of economic recovery and backstop by government support programs. Retailers, particularly those reliant on bricks and mortar outlets, have endured a difficult time as stores were forced to close. Inditex, the world's largest clothing retailer, reported a sharp fall in full-year profits, made worse by the trend for stay-at-home loungewear, rather than the fast fashion favored by the likes of its Zara chain. Discount store Primark reported plunging profits, but is plowing on with openings on hopes that pent-up demand would drive consumers back in store. After enduring the worst year in aviation history, first-quarter announcements from U.S. airlines were peppered with optimism that the worst is behind us and hopes that the summer holiday season could be saved. In Europe, Ryanair chief Michael O'Leary told an FT audience this week that corporate travel could be back to pre-pandemic levels by 2022. Announcements from the luxury sector have been even more optimistic, indicating damage from the pandemic could be overcome as early as this year as shoppers in the U.S. and China more than compensate for the lack of sales from shuttered boutiques in European capitals. Hermes yesterday reported revenues 33% up on the same period in 2019, while LVMH, the world's biggest luxury group, last week recorded an increase of 8%. Consumer companies offer some interesting insights into societal changes. U.S. group Procter & Gamble lost sales on razors as men toiled at home unshaven, but more than made up for the shortfall from the boom in cleaning products. Nestle, the world's biggest food maker, reported its fastest quarterly sales growth in a decade as caffeine heads swapped their usual cafe visits for Nespresso pods and splashed out on home baking ingredients. Obvious losers have been sectors relying on live events such as concerts and professional sports. Informa, the world's biggest exhibitions organizer, announced a loss and said it expected large-scale physical events to be one of the last parts of the economy to return to pre-pandemic trading levels. One question still to be resolved is whether stay-at-home stocks that benefited from the pandemic, such as video conferencing company Zoom, can continue to expand as life returns to some kind of normality. There will be more clues next week with quarterly statements due from Apple, Amazon, Facebook, and Microsoft. Global economy services in the Eurozone have returned to growth for the first time since last summer, while manufacturing is expanding at its fastest since records began in 1997, according to IHS Markit's PMI survey. Pent-up spending, restocking, investment in new machinery, and growing optimism about the outlook have all helped fuel a further record surge in both output and new orders, it said. The European Central Bank said the recovery still had a long way to go as it kept interest rates on hold at its latest monetary policy meeting consumer confidence, and spending in the UK is rebounding quickly as the second quarter gets underway. According to new research data and confirmed by official figures on debit and credit card transactions, retail sales in March rose strongly as Britain stocked up on food for Easter and clothes and gardening products. The UK pandemic support measures have pushed borrowing to its highest level since the Second World War. Business: the true scale of pandemic damage to UK business may be revealed when the dam of zombie businesses breaks this summer as government support measures come to an end. The number of companies in serious financial distress has risen at the fastest rate in more than 7 years, according to Insolvency Group Begbies Traynor. The continuing huge demand for home PC during the pandemic helped chipmaker Intel mitigate losses from its data center business as it reported first quarter results. Global PC sales peaked at more than 350 M in 2012 before falling below 260 M in 2018, only to jump back above 300 M last year. Falling demand for newsprint and office paper has been turbocharged by the pandemic, dealing a harsh blow to the paper industry. Finland's Stora Enso said it would close 2 paper mills and reduce capacity by more than a third. The shift has, however, been cushioned by the demand for packaging materials as online shopping continues to grow. Markets: as a strong U.S. bounce-back fuels fears of economic overheating. Funds that hold inflation-protected bonds are enjoying their highest inflows since the aftermath of the global financial crisis. Treasury inflation-protected securities are not going to give you great yield or return potential. But if you are worried about a significant upside surprise in inflation, there is really no better investment out there that can act as a hedge, said one analyst. For equity markets, the parallels between current conditions and those of 1999 are striking and worrisome. Writes CD strategist Tobias Levkovich in the FT Investor Euphoria. Driven by the fear of missing out and the widespread belief that this time is different, indicates a market correction could be on the horizon, he argues. Developing countries borrowed on foreign markets at record speed in the first quarter, but a resurgent virus in countries such as India and Brazil means risks are mounting for investors in emerging market debt. Please use the sharing tools found via the share button at the top or side of articles. As a social science academic, I have been working in a hybrid mode since the early 2000s when laptops became powerful enough to run advanced statistical packages. What are the benefits of this? I am by far more productive at home than in my office. I work faster and on more sophisticated issues. All my research projects have been produced at home. In my department room, I work on my repetitive tasks, for example, marking exams, and have meetings with my students, the staff, and the faculty. What are the main problems with this hybrid model? You need a considerable amount of self-control, and you should learn how to manage your time and when to stop working. Many academics are crazy workaholics, and the average working time exceeds any healthy standards. Many surveys show this. I employed several years adjusting my life to this, and now I am more efficient. Final thought: the diversity of nominees for the 93rd Academy Awards is being touted as a watershed moment for the film industry. Here's everything you need to know about Sunday night's Oscar: Economic Geographies of Pandemic Europe. Europe provides a fascinating example within the global north of how economic geographies of the pandemic will be shaped by pre-existing inequalities, by the intensity of the pandemic-induced economic shock inflicted on individual economies, by the ability of individual countries to respond to that shock, and by their ability to stage an economic recovery. Of crucial concern here is the core periphery dynamic, or more specifically, the divergence between Northern Europe and Southern Europe. Describing Europe in terms of north-south divide is, of course, an oversimplification of a much more complex economic geography of Europe. See Sokol, 2001. But the fact is that significant economic differences between the core Germany, Belgium, the Netherlands, etc., and the southern periphery, Portugal, Spain, Italy, Greece, remain despite decades of European integration. The global financial crisis of 2008 and the subsequent sovereign debt crisis in Europe have brutally exposed and further deepened these differences. EU-imposed austerity may have stabilized the Eurozone and allowed the core to recover, but it left the southern periphery weaker and more vulnerable. Indeed, in 2019, Germany's output was approximately 15% higher than in 2007. Belgium's was 13.5% higher, and the Netherlands was up by 12%, World Bank 2020. By contrast, The Italian GDP in 2019 was nearly 6% lower than in 2007, and the Greek GDP was, astonishingly, nearly 25% lower, while the 2019 outputs of Spain and Portugal were only about 4.5% and 2.5% above their respective pre-crisis levels. World Bank 2020. The contrast in sovereign debt levels between the North and the South are equally stark. Germany's sovereign debt to GDP ratio stands at approximately 62%, and that of the Netherlands at 52%. Meanwhile, Italy's sovereign debt burden is equivalent to almost 135% of its GDP, and Greece's exceeds 185% of GDP. The Italian and the Greek banking sectors are also among the most fragile in Europe, with high ratios of non-performing loans. Reuters 2020a. Stark differences in economic performance years are also reflected in unemployment levels. Greece, Spain, and Italy have the highest unemployment rates in the EU, reaching 16%, 14%, and 10%, respectively, in contrast to Germany's 3.2% and the Netherlands' 2.9%. Eurostat 2020. All these differences are about to be dramatically exacerbated by the crisis. Extending the analogy made by Ruse, 2020. In connection to Italy, it is of cruel irony that the southern periphery, being the weakest economically, was also hardest hit by the coronavirus. Furthermore, on top of everything else, the economic and employment structure of the southern periphery makes it extremely vulnerable to the current crisis. Tourism accounts for a significant proportion of employment in Greece, over 25%, Portugal, over 20%, as well as Italy and Spain, nearly 15%, while these countries are also more dependent on small businesses, which may have a harder time surviving the crisis or taking advantage of any employment protection schemes. Arnold and Dominy 2020. The IMF forecasts that unemployment rates are expected to increase significantly in 2020, peaking at over 20% in Spain and Greece, about 14% in Portugal, and 13% in Italy, compared to 4% in Germany. In 2020, it is expected that the Eurozone as a whole will be hit hard by the crisis, with the bloc's GDP falling by as much as 7.5% in 2020 in 2020. However, it is widely expected that the fall in the southern periphery will be more pronounced, while its subsequent recovery will be weaker. See also Munchau, 2020. Thus, the uneven economic impact of the crisis combined with the uneven recovery, playing out on an already uneven terrain, will drive the North-South divide to new levels. What do you think of our video? Let me know in the comment section below. If you enjoyed this video, make sure to hit that like button. Also subscribe to our channel before you go. Thank you for watching.